The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi, everyone. Basil Chapman, Tiger Technicians Hour. This is the Wednesday edition, Wednesday, 27th of November. And just in case, you know what happens, I could run out of time, and then I turn around and say, oh, my goodness, show's finished. I never even said. I wish everyone a really happy, wonderful Thanksgiving, and most importantly, a healthy one. And let's just go right to the numbers now. We're looking at the E-minis, which are up 4. They made a peak E in the Chapman Wave methodology at 1809.25. What's very interesting is that you might remember, I always talk about the rectangle formation, how important it is to observe what the rectangle formation is doing in terms of giving parameters to the boundaries. Well, there is a boundary between 1798.50 and 1809.25 on the S&P, and that can stay for quite a while. So let's put this in the whole context here. Let's move the 120-minute chart away. If you're looking at Tiger TV, you'll see that I'm moving that away. And now you get your usual left side is the daily chart, middle is the weekly chart. Let me just get that. Seeing it remotely today. And monthly is on the right. So let's go through the numbers, and we'll do this because Friday is a half day. There's a holiday here at TFNN, and I probably will be away next week. So while we're doing this, let me just say first and foremost that in looking at the charts, looking at literally dozens and dozens in all time frames, I've been talking about when you get to the second week of November, very, very often, I don't mean just like 2 times out of 10, I would say the majority of the time, 6 or more, 7 times out of 10, when the Dow has made its way to recovery highs in November, the second week, there's a really good chance that it could close the high near, at, or just above all-time highs, number one. Number two is, in the context that I'm looking at right now, the technicals, if I look at the, see if I can just balance this here. Okay, I've got it. If I can look at the INDU, this is the Dow, in the daily time frame, I didn't quite finish that, I've got it at a peak G/C. My preference right now is to call it a C, and I'm just going to put that C in because it's easy. And if there's no new high today, in other words, if we do not see the Dow at the end of the day having gone above 16,120.24, 20.25 was the high of yesterday. Why do I say 24? Because if it goes to 25.25, that merely makes the high of yesterday, leg C, a continuation pattern, because you have to have it 0.01 less than the previous session to form a peak in the Chapman Wave methodology. Now let's look at it this way. If I'm looking at the Dow, I'm looking at the on-balance volume screaming to the highs, stochastic at 94% and holding there. But here's the issue. It's been holding there quite some time. And so often, a 94% to 95, 96% area, when it continues for a certain amount of time, I'm just going to say this off the top of my head because it's more experience and I should define it better, but I feel very comfortable saying if it can go for about 28 to 35 sessions, still holding that area and even having had a bit of a pullback and still not breaking under 80% and then getting back to 94, that second round, which it is in now, says this is the round that you've got to be really careful with. So for my subscribers, I'm open and call. We've taken, I think, appropriate action. I have no idea if it's going to be appropriate, but we've done something that we tend to do at these levels. That's number one. Number two is I'm still looking at stocks that are acting very well in our portfolio. We've got we've got some real nice winners. I mean, one is up 220% or something from the initial buy signal, even though we've sold some but kept the call. Another one's up about 30%. one short that was Boeing didn't work well. It depends. If you didn't get out pre-opening, then you're still in it, and you've got to stop at the entry price, so there'll be no loss taken there. Another one is a short that we've got, which is still working, and we've got other long positions. But I'm looking at this and I'm saying, wow, I'm now getting the feeling that there are so many people coming on and saying, when I had a chance to listen to CNBC yesterday, who are talking about they are really afraid to go short now. And what they're saying that the surprise could be to the upside. That's number one. Number two is every bit of work I do in the sentiment indicators is saying we are close to a reversal. But that's only a reversal. That doesn't say it's a major top. It just says we are close to a reversal. And that means go to look at your longer-term charts if you want any kind of veracity, if you want to be able to look at this and say, we are in a situation that says that the general market has been moving higher. The stocks that have been battered have just been slammed to the downside, but you've got an equal amount going to the upside. That's why yesterday was a 0% change day. I make a note of those. That's when I used to do my hand charting. That to me was really important, those 0% change days when the Dow, even to this day, I took a Dow close below 1 point of less than 1 point as 0% change. Even in 1920 and 29 and 30 and 30, when I hand charted going back all the way, when I got all the numbers in the book on the Dow, I kept the same thing, and it's very important to me. It's telling me a whole story, and I hope to elaborate on that for my subscribers, which I'll probably send out for Friday, going into early next week, so give parameters that I'm looking for. But look at this. You've got the pattern that I call the stork leg with a leg in the weekly chart. There's the body. Now we've got the neck. It's moving high, and you're getting to the resistance area. But the resistance area in the weekly says you can go all the way to 16,220 to 16,250. The monthly chart, look at this. It has a very, very long-term trend line. Look at this. If you're looking at my chart, that's a trend line that goes all the way. Let me squeeze it so you can see. Squeeze once, squeeze twice, good old squeeze. All the way back to 2000, 11,749. Where are we now? 16,101. So when you're looking at this chart, I take stock in this. This was a very strong resistance line. But if you go above the green line, which in the monthly chart would be right about 16,470 or higher, that's a breakout. But then there's the pattern that I keep talking about in the S&P, where you go from a peak C and then you take your time and you go to a D. It doesn't happen often. But then you go quickly from a D to an E. So I'm looking at this in terms of my longer term, and I'm saying I still see a lot of positives. On the shorter term, I'm seeing very limited upside at this particular point, very selective. You've had a couple of days where the Dow has just been squeaking mostly to the upside and then closing towards the highs, but really not a big deal. And all the time, the sentiment indicators have been pulling back. But now look at this, and this is going to be very important to me. When I'm looking at let's just run the numbers here. So the S&P, so the Dow is up 27 at 16,100. The S&P, SPX.X, has, that's interesting. That has an alternate count, G/C. If it breaks above 1808.42, and the high today is 1808.18, 6 points to go. 42, no. 42, it's 26 cents to go. That's nothing. And then it breaks out and it continues this pattern. So this is either brand new A, B, C, or G/C. And all I can say is that here we go. The weekly chart is going right to that red line resistance, and that red line resistance comes in at about, this is this week, at 1816. Next week it moves up a little bit to 1821. And the monthly chart is right at that green line, that very long-term resistance line. So I'm watching that very closely. Let's look at the IWM. The IWM is the Russell 2000 ETF. And what is it doing? Very strong, up 43 cents at 113.26 in leg C. So everything I'm looking at when I put into context says that there could be a pullback today with the Dow not making a new high. Did it make a new high? Let me just go to this particular chart right here. That's what I want to see. Did it go to, it's a peak D in the 120-minute chart. The VIX is down at 12.59, down 22 cents, still above the recent low. Yeah, this is very interesting. Good chance that we make a peak C today, and I think Friday, the half day, we make a D. So early next week, we could start to see some kind of consolidation. I am going to call it a consolidation for now, and that consolidation could be small, could be a high-level consolidation, it could be a consolidation of many points in time. I don't know why, and let me explain why. When you're looking at the QQQ series, see how strong the IWM is in leg C, and it could still go to a D. The QQQ I've got now, I could call it a B, but I'm calling it an E. The stochastics at 93% with the MACD is still good. But the weekly chart is very strong, and it has broken out in the weekly chart. And the monthly chart going to leg E is going up towards the second set of trend lines, resistance. And I'm going to expand this so that you can see. If you're looking at Tiger TV, you'll see these charts nice and clear. Right there, this is the QQQ trading at 85.08. And there it is, leg E. So let me get rid of that. That's no good. And the resistance will start, well, it starts at 86.45, but let's look at next week. Next week will be 86.45 to 88.70. Next month, I didn't mean next week. This is the weekly, monthly chart. Next week, the resistance, well, it's already broken out. Now, this is interesting because I've got it in leg F in the weekly chart. So when I try to put the whole thing together, I'm saying, yes, there is consistent buying. It's real simple. Why is there consistent buying? Because if you're looking at interest rates, and if you're looking at the TLT, which is trading the bond, the 20-year T-bond futures, trading at TLT. If you're looking at the futures, trading at 104.38, came off peak E, trough E. But here's the pattern that I'm looking at. You see this H formation? So far, the 102.11 has not been hit. I think 102.13 was it, or 15? 102.16 was the low of last week. Now, this is very interesting because the MACD is improving. Stochastics giving you a very, very strong divergence. I'm looking at this and I'm saying I think we're going to get some information from bonds this week. Next week. Well, it'll be Friday as well. Trading day Friday. I'm just putting at U.S. This is the continuous contract of bonds. And you will see that the bond contract itself did not go anywhere close to the low. And in fact, I've got a trend line here that's showing. And what is that? That's just a consistent trend line that says that that bonds, the continuous contract at 130.5 goes all the way back to September as a fulcrum point. So I'll talk about that more when we get back from the break. Got a break coming out. Basil Chapman, Target Technicians Hour, and the Dow is, S&P's up 5.33, and the Dow is up slightly. I'll be right back.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, everyone. We're back. Let me just finish this chart here. A, B, Chapman wave, we got ABC. Get rid of that. That's a D. This is the chart of UNG. This is, I can't even understand. How come I didn't buy it when I kept talking about it and said I really love this? It's still early in the game. UNG is trading at 1902. This is a natural gas, United States Natural Gas Fund. The daily is in leg D, 120-minute chart leg E. It's just about to have a bit of a pullback. And I got to keep this in mind. I just forgot about it. And there's that H pattern. The H pattern that I spoke about before. Where was that other H pattern? Let me just have a look here, and then we'll go to our callers. I think it was here. A great study I gave this morning to my subscribers in a chart that I found. I'm almost sure it was it. Let me just have a look here. Yeah, Rite Aid. Rite Aid is trading. There's that H pattern again. I love when chart patterns repeat, and chart patterns repeat regardless of the different sectors. I don't know why that happens. If there's no relationship, against the patterns repeat. Look, there's the H pattern, a great example of the H pattern breakout. 506 was the low, Rite Aid was the one we have from $1.78. Retested at 504, and then there are a whole bunch of technicals that go with it, but if those technicals succeed and it breaks and closes above the arch formation, that's a powerful move. Well, we just saw that, and it went all the way to today's high of 595. Wow, what is going on with that stuff? All right, let's go to Dan in North Reading. Hi, Dan. How are you?
Hello.
Hi, Dan. How are you?
Good. Glad to have you back. How you feeling?
I'm good. Thank you very much. So you're going to be looking at?
I wanted to look at Hewlett-Packard. They had earnings today, and I got stopped out, I don't know, a week ago, 2 weeks ago, and don't want to chase after it. But now.
Okay. So give me 1 second to update it here. Just using one hand, and I always need to go to the left side low bar. That's the most important thing in the Chapman wave. There you go. So that's very clear. It's funny how someone must have known something, because Hewlett-Packard, HWQ, which is trading right now at 27.14, A, B, C, D, E, and here's the spike, and here's the spike A, F/B. All right, so this is what we've got. We've got a low bar right there on the 7th. I think the 7th or 8th. Let me double check. So what happens is, folks, we're looking at, on the 8th of October, Hewlett-Packard, HPQ, goes to 20.25. It has a gap down. This is just one of those many. I'm going to put that in my notebook. HPQ, great example of gap down, then break upside. I mean, all the rules that you could find say that shouldn't work. You should gap down, and you should stay down because things are so bad. And then what does it do? The gap from August the 25th, August the 21st at 25.54, gaps down the next day, has a high of 23.24, but it goes all the way down to 21.81. Then it makes a low that it had recently of 20.25 on the 8th, and now it's a powerful move with a gap up to the upside. Now, the big thing is this. Looking at, so you have no position right now.
Nothing
and
now, no.
I'm not sure why I have nothing on Hewlett-Packard. I guess because I just took it off my list. This thing was down at 11-something. Remember all the bad news? It's funny how that works. 11.35 is the low on the 30th of November of last year. Then it goes peak A, B, C, D, E, F, and it goes to a G. Now it's making a U-turn with an A to a B. See, this is one of the reasons why I think very selectively this is the time to be looking at shorts, but not to get it into your head to go crazy short on the whole market or any whole sector unless certain things come together. And right now, the 27.74 level is the 200-period exponential moving average, and there's a really good chance that, yes, it could be making a U-shaped double top, but because the magnet of that 200-period moving average is now grabbing at it and trying to pull it towards it instead of pushing it away, that's the weekly chart. I didn't mean to do that. I have to look at the monthly chart. Well, of course, you know that I've had all these charts notated, so I just don't have it at this particular point. This is leg A, and if it goes 1 penny above 27.78, that's the high of August of 2013, that will be leg B, and it will make 28.54, the 200-period exponential moving average, the magnet. I'm beginning to find this very intriguing because in a certain way it's a little bit of an economic statement. Hewlett-Packard, which is really in, I would put them into the area of goods and services, basically, at this particular point. So I'm going to do a little bit of work during the breakdown. If you don't mind holding, and you'd like just to know what's happening next, so I'm going to try to do that. Is that okay?
Yep, that's fine, thanks.
I'll be right back with Dan North Trading Trail.
With over 3 decades of trading experience, Andy Hecht brings a tremendous amount of knowledge and expertise to each weekly issue of his newsletter, the Technomental Commodity Report. The Technomental Commodity Report gives you Andy's unique technomental analysis of the commodities market, a combination of technicals and fundamental analysis which he has developed and perfected over his many years of trading. The Technomental Commodity Report is only $49 a month, and right now you can get a full month-long trial subscription while paying absolutely nothing. See for yourself the kind of weekly report Andy delivers to his subscribers every Thursday morning. You'll receive specific stock, ETF, and option trades based on Andy's analysis, so no futures account is required. For all the details and to start your month-long free trial to the Technomental Commodity Report, visit TFNN.com today.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi, everyone. Basil Chapman. We are back, and let's go straight back to Dan, North Reading. I'm looking at, so this is the issue now with Hewlett-Packard. I think that there's a shorter to an intermediate term trend change. At this particular point, a lot of the evidence that I'm looking at says that it's not really a short because it's become attractive to certain buyers. Just by the action today, the fact that it gapped up, it's holding halfway into the candle. The 120-minute chart has started its second candle, and it's in a D with a possible PD being formed. If I would look at it this way. If Hewlett-Packard pulls back next week, by next week, I should say, by about Tuesday or Wednesday, goes under 26.75 but holds 26.20. So it doesn't have to be that precise, although I'd like to think that 26.20 would be a really good cushion. And then it turns around and then it goes back, and by Tuesday or Wednesday, it actually you find that it's back at 26.90. As a very short-term trade, I would trade it. In fact, the moment it goes under and then goes back 1 penny above today's low of 26.75, if it hasn't taken it out today, I would trade it, and I'd trade it for an inside buy mode going towards the top, and the top would be 27.50. So that's not very much in points, but I'll explain what I'm looking at. If that kind of strength is held, there is the 200-period moving average in the weekly at 27.74 kicks in, and then the monthly kicks in at 28.54. So all I can say to you is, as a trade, for 2 points or more, I don't actually see that right now. On a pullback that holds really well in that low 26 area, I then can see a rally of approximately 1 1/4 to 1.5 points, which is not bad for a $27.11 stock if you're thinking of a trade. I know that you like to look at things a little differently, a little bit longer term, right?
Yeah, yep. I'll probably wait on it.
And therefore, I'm going to suggest to you, hold off, put it on your watch list. If by the end of the first week of December, Hewlett Packard is not even close, being close to filling in the gap, and the gap is yesterday's high of 25.45 and today's low of 26.75. If it hasn't even got close to filling it in, I suspect that going into end of the year, that fund managers will look at this and say, hey, this is a nice position to have. Going into the end of the year, we'll get rid of it in January. All we want is 1.5 to 2.5 points. And that could be a nice trade. Then what happens, if it succeeds in getting to 29.80 or 30, then suddenly the monthly and the weekly 200-period moving average becomes support. And I'm loving this because I'm looking at stocks that got hammered over the recent year and a half, 2 years. And I love to look at these as recover, like Boston Scientific and Rite Aid, stocks that I've considered to be turnaround situations because they've had a huge period of doing the wrong thing, and now they're finally getting things right. And I think it looks like they're starting to get things right. As a position play, I still would say to you, for the number of points of the percentage, I would wait for a pullback. If you miss the pullback, I don't think I'd consider it a short unless it gets right to the 27.47 to 27.57 area, and then suddenly it looks like it's about to pull back. Then it could have a sudden retracement of $1.50. Not a bad percentage play, but that's all I'm looking at. I'm looking at the intermediate term being absolutely beholden to holding that 26 to 25.5 area over the coming 2 weeks. And if it starts to move higher, I think it's going to be one of those stocks that can avoid any sharp downturn in the market. Doesn't mean to say it's going to go much higher, but it'll avoid a big pullback. So I hope that helps you looking at it.
All right. Thanks, Basil. Have a good Thanksgiving.
And have a wonderful Thanksgiving. And, folks, what I'd like to do now before I run out of time, I wanted to say thank you to TFNN and everyone there, and Tom and everyone. Just all of you have a wonderful, wonderful Thanksgiving. And I know my family's going to be here and my grandchildren, and I'm looking forward to it. It's going to be nice to see them all. Now, one thing that I wanted to say, just in terms of the market itself, the volatility index. When I look at the VIX index, VIX.X, it is stuck, but it is starting to form the kind of pattern at the bottom that says it's getting harder to push me down, right? The last low was 11.99. It's got that pattern that goes to an H and then an M. And all I can say is if by Wednesday, this coming Wednesday, just a few days' time, if the volatility index hasn't taken out 11.99, but instead is trading at, it's at 12.59 right now, is trading at higher than 13.50, but absolutely if it's higher than 13.95, the high of the 20th of November, that's going to say to me a short-term period of volatility with the VIX rallying, with the general market pulling back very selectively. And I can tell you this, that based on the work that I'm doing, there is a particular sector that is starting to get more overbought than I shouldn't say any sector, that's not true at all, but more overbought in the monthly chart than any sector per se. I've seen stocks do this, but not sectors. And that is telling me that when I looked at the rotational aspect, one of the reasons why I talk about aluminum and steel and areas that look at the way General Motors is acting, GM. Now, this is a bifurcated market. GM is beautiful, lovely. I can't believe that I had it. I even said to subscribers, if it ever gets under 20, we're going to buy it. Never bought it. Missed it. Well, we've had some other nice winners, but isn't that interesting? So now what I'm looking at is Ford is acting okay today, but not great. Has that H pattern. Yeah, it could maybe break out, but it's not acting as well as GM. So this is a very interesting market. Look at BIIB. I never remember the name of this. Of course, Biogen IDEC. Wonderful move, gaps up, huge move, massive move in the monthly, leg G/C. Daily is who knows what it is because it's gapped up. This could be a leg B or an E/B. Nothing technically wrong with it. Look at the weekly chart. Weekly chart says, oh, that's a pattern that I've seen before. This is a very powerful leg E, but it's becoming extremely overbought on a purely technical basis. Doesn't mean to say I have the signal yet, but it says this is one you got to watch. And yet you look at a stock like Amgen. I can't remember if I updated Amgen. AMGN. Whoops, I typed it in the wrong place. AMGN. AMGN. And lo and behold, what do we have? Consolidation near the highs. Peak E in the daily. Peak E in the weekly. Peak leg F in the monthly. I have to tell you, I'm looking at these and I'm saying, I don't know how much further you guys can go. You certainly surprised me by getting stronger than I ever thought. But it's just a sector to watch. Now look at this. I picked up a couple of things that I wanted to mention, which I wrote down. So the first thing is, here's a very important aspect that I'm looking at. The expression, the market loves to climb a wall of worry. Well, there's very little worry right now. In fact, all the economic news is really beneficial. And look how the market has suddenly slowed down overall. Yeah, it's making new highs, but there's a momentum shift, I believe. So I'm going to be watching this really closely because markets tend to fail when all the good news is out. And they tend to run when all the bad news is still coming out. So that's a heads up. Now, in the daily charts, there are many daily charts that are extended, but I showed you the weekly charts are also in many sectors. Look at this, IYC. IYC is the iShares, Dow Jones U.S. Consumer Cyclical. Daily, monthly, very strong leg D. There it is on the right. Just touching, in fact, just breaking out of the very long-term uptrend line. Weekly, leg F/B. So far, nothing technically wrong there. MACD is very strong. Stochastics at 97%. Can you be 97% is like when you see the stock back in going into the March low. We saw indexes down in the single digits. Some were down to 3%. That's the equivalent of having the potential now to go from 97 to 67, 57, 47, 37 at some point. And if it's a weekly chart, that point could still be quite a number of weeks away. When you see it in the daily chart, and I've got an alternate count here. So this again, there's your trend line right there. This is the IYC trading at 119.29, up 31 cents. Look at this. We've got leg G/C. So all this is telling me that sometime early next week, we should see some kind of a short-term top. That's all it's saying. But identified correctly with the right stocks, and I think individual stocks could pull back 12 to 15 or 17%. The indexes don't necessarily have to do that. Let's go to Dan in Baskin Ridge. Hi, Dan. How are you? Dan.
Yeah, doing well. Thank you.
Good. That's great to hear. And I hope you have a great Thanksgiving.
Likewise.
You'd like to look at?
UVXY?
Trading at 18.74. UVXY is the ProShares Ultra VIX short term. Now, I just have to warn you folks, if you have never traded this before, this is the 200% short, the volatility index. It acts like a 300%er. It really moves very, very. We've had this a couple of times, very small losses, 20 cents, 30 cents. But when it works just great. And if you're in the wrong position, look at the way it's gone from the 25s, where it seemed 26 area, where it seemed to be holding so well. The market is not that much higher, and yet this has gone from the 25, 26 area right down to the 18s. That is a huge move. That's 28%, something like that, down. Okay, so your question is, well, what do I do with this right now? Is it time to enter?
Yeah. I mean, it looks like it's in trough F, right?
Correct. That's exactly what I've got. actually it's trough F because we had a higher low yesterday. That's correct. The stochastics at 708 and the MACD is flat and the on-balance volume has just turned up and the relative strength is just showing a tiny bit of strength. So I don't want to run out of time. What I'm going to say to you is this. I know that you look at this real closely, and I know that you have a tendency, like I do, to try to keep stops fairly tight because you know you can always re-enter. You want to preserve your capital. So I know that I'm also looking at the Dow potentially in leg C, maybe a G. But if it's in G, it means that if it drops Friday and Monday, it's going to come down. But I've looked at too many charts today that say they have one pullback to come, maybe Friday, and then a rally Monday or Tuesday, and then we've got to be real careful. So either you could wait for the UVXY, which had a low today of 1862. You can buy it in between 1862 and 18, I think it was 40 or 35 yesterday's low. The low. 1811 was the low. So somewhere between there, I would feel comfortable saying to you that if you were prepared to have, if you bought, I don't know if you want to buy two positions or whatever it is. If you bought two positions, this one here is a lot more risk, obviously. My preference is to get it under 1850, either under 1850 with a stop under that 1811 low, and I'd put the stop, I'd say a stop under 18. The first entry, you're going to have a little bit of a wide parameter for a stop. Now, what's really important, if by Wednesday or Thursday of next week, the UVXY is trading anywhere in the 20s, that'll be the first sign to say, I've reached a trough F. The weekly chart is it's 0.76 in the stochastic. My indicators are saying, I don't know how high the volatility index can go, but absolutely in this area, within 80 points of the Dow, within another 8 points or so of the S&P, we should be seeing some kind of a digestive phase going into next week. So that's my recommendation. You maybe nibble here and a little bit more if it drops to the 1850 area. You've got to watch it closely because it's going to be whippy over the next 2 days, but it's by Tuesday or Wednesday of next week that you want to see it not at 1870, but trading at 1990 to 20.35 or higher. Hope that helps you.
It does. Thanks much.
Great. Have a great Thanksgiving. Let's go to Goa in Newport Beach. Hi, Goa. How are you?
How are you, sir?
I'm very well, thank you.
Right. I need your idea regarding PXD, Pioneer Natural Resources. Yes. I would appreciate to see that how far you think it's going to go, or it will go any further than this.
Okay. Pioneer Natural Resource Exploration Products, Oil and Natural Gas, trading at 180.31, had a spectacular move, leg D, and probably be a peak D in the monthly. Peak F, a beautiful top at 227.42. I had a choice of either shorting this one or going for something else. The something else didn't work out. This is the one I should have chosen. I'm thinking that right here is not the place to be shorting it. I don't think, if today, as we were talking, instead of being at 180.29, it was at 185.90 or a little higher, I'd say great. I think this has got a potential to bounce to the 189, 191 or 92 area, then you've got to get out. At this particular point, I'm going to say hold off. I don't think the bounce of this morning is failing. I know I'm talking only after 2 hours of the market, 2.5 hours of the market. I don't like this action. I think it's going lower. So as a short, if you were to short it either right here at 180.2, now I don't know which way you wanted to go, so I'm saying as a short, if you wanted to look at it here with a stop at 184, oh, you know what, we've got a break coming up. It'll give me just enough time to do a little bit of more work on it on the 120-minute chart, and then we'll look at it. But my eye is saying right now, short, not a long, and I'll be right back with...
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Have you subscribed to the Gold Report yet? On Wednesday, August 14th and Thursday, August 15th, Tom O'Brien advised his Gold Report subscribers to close out 6 of their 9 open positions, all winning trades ranging from a 10.69% profit to an incredible 48% profit in just one equity. Tom O'Brien brings an incredible wealth of knowledge and experience to the gold market and the equities within the industry. That's almost 12 years since this powerful newsletter first began. And right now, you can get a 30-day free trial to the Gold Report by visiting TFNN.com. Make sure you're a subscriber as this volatile gold market makes its way back into positive territory after declining all the way from $1,900 to under $1,200 an ounce in only 2 years. Get your 30-day free trial today by visiting TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
What's the one thing that pulls people back from the breakthrough that they're moving towards? What's the only thing that really stops people from taking action? You and I both know the answer, and sure, we can come up with the reasons why we're not where we want to be, but the only reason that we don't do more with our life is fear. Or if you're an overachiever, call it stress. Simply put, there's something that happened to us in our past that's holding us back from the life we deserve, yet you and I are okay, we're here. So why should we let our past control our future? Exactly. We shouldn't. Hi, I'm Steve Rhodes with TFNN.com, and when it comes to your trading and investing, I can help you overcome your fear of loss. Together, we'll turn weakness into strength with a system I've developed called Mastering Probability. I'll teach you how to make your money work harder for you than you do for it. I'll teach you the tools that provide financial freedom. Go to the homepage of TFNN.com, click on my name, Steve Rhodes, and begin your journey of mastering probability risk-free. It's time to become a pioneer of your future versus a prisoner of your past.
This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi, folks. We're back. Basil Chapman, Stock Technicians Hour. S&P's up about 4.5. Dow is actually giving up some of the gains. I'm just looking at a tight market. Is that a fantastic run? That's all it is. It's up 30. So we're on with Garo and Newport Beach, and we're looking at PXD, which is Pioneer Natural Resource, trading at 179.75, down 3 3/4, almost 4, in fact, as we're speaking. So, Garo, if you were able to, and it isn't in your technique to do it, but if you had shorted the pop-up today, then I'd say I'm very comfortable with that, because I think it's going to test the candle of 3 days ago, and there's a real good chance 177 to 175 would be my downside target. So you don't have a position, right?
I do have it, sir. Today I shorted at 60 minutes. The SAR parabolic dots were...
you went, of course, you went to the shorter term. I was going to say, if you went to shorter term, and I forgot all about the 60 minutes. Absolutely. So you're short. I'm going to say to you, that's a fantastic position, because that's the way it's going. All I'm going to say to you, you like to get your 3 to 4 points. You've already got a couple of points. I suspect, I know that you don't like to hold overnight. I would hold this into the close. I would also say to you, if it's really weak at the close, I'd actually hold it into Friday if you're around. But into the close, I think you're going to get your points. This is a very weak stock. At 175 to somewhere around there, it might have a bounce of 4, 5, 6 points, but I think it's going lower.
Okay.
So that's the story there, and it looks like I'm just going to have to wrap up now. I've got a bunch of people that have just arrived.
Yes, sir.
So,
Yes,
Gareth,
sir.
thank you very much. I'm going to wish everyone a great Thanksgiving, and just watch those parameters. Let me give it to you again. Right now, the Dow is going to be, if the Dow goes below the, I've got people waiting. If the Dow goes below 16,000, you got to be, if it closes below 15,980, be careful. We've got a consolidation. If it breaks out above 16,240, it goes higher. I'm just going to say that if the next few days of next week I'm not here, you've got the parameters to watch for, and I do want to wish everyone at TFNN a great Thanksgiving, and to all listeners. And I'll be signing off right now.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.